All right, let's talk about something that can feel like a real puzzle: minister compensation. Whether you're a minister yourself, a church administrator, or even a tax pro, you know this stuff can get complicated. Getting it wrong can be a huge headache, but getting it right, that can unlock some really significant benefits. So today, we're going to demystify the essential tax rules you need to know, using a fantastic article from overnightaccountant.com as our guide. Let's get into it. And isn't that the truth? The article kicks off with this quote, and man, does it hit home. From just keeping the right records to getting the W-2s perfect, the whole process is complex. So, if you've ever felt a bit lost in all the details, you are definitely not alone. Our whole goal here is to cut through that confusion and bring some clarity. So here's our game plan. We've broken it all down into 5 key parts. We'll start with who the IRS even considers a minister. Then we'll unpack the super important dual status idea. After that, we'll get into the different kinds of income, take a deep dive into the housing allowance, and then wrap up with how deductions work. It's a clear roadmap to get us from confused to confident. Okay, first things first. Before we can even begin to understand the rules, we have to know exactly who the rules apply to. So what does the IRS actually mean when they use the word minister? And here it is, the official definition. You can see it's pretty specific. It's all about being duly ordained, commissioned, or licensed to perform religious duties. This isn't just a job title, it's an official designation, and it's the key that unlocks all the special tax rules we're about to get into. All right, moving on to our second section. And this covers what is, honestly, the single most important and probably the most misunderstood concept in clergy taxes. We're talking about being dual status. This slide really shows you the puzzle at the heart of it all. For your federal income tax, a minister is treated like an employee of the church. Simple enough. But, and this is the twist, for Social Security and Medicare, you're treated as self-employed. So what does that actually mean? It means the church doesn't pay its half of those taxes. The minister is responsible for paying the entire self-employment tax bill. This split personality, so to speak, is why things can get so complicated. Now, it is worth pointing out that there is one way out of that self-employment tax. A minister can file for an exemption using Form 4361. But, and this is a big but, it's only for those who are conscientiously opposed to receiving public insurance benefits for religious reasons. It is absolutely not a tax loophole. It's a very specific provision for a very specific belief. So we know who we're talking about and we understand their weird dual status. Now let's get into the nitty-gritty. How do you actually report the different kinds of money a minister might receive? This is where the theory turns into real-world action. This chart breaks it down perfectly. Your regular salary from the church, that goes on a Form W-2, just like any other employee. The catch is, the boxes for Social Security and Medicare will be empty. What about fees for things like weddings or funerals? That's self-employment income, and it gets reported on a Schedule C. And what about those gifts you get for performing a service? Well, those are taxable income too. And this distinction is so important. Think of it this way. A church member gives you a personal birthday check with no strings attached. That's a true gift. But if money changes hands in exchange for a service you provided, whether it's officiating a wedding or giving a special sermon, it's not a gift in the eyes of the IRS. It's income and it's taxable, plain and simple. Okay, on to Section 4, and this is the big one, the Ministerial Housing Allowance, also known as the Parsonage Allowance. This is without a doubt the most significant tax benefit available for clergy, but you absolutely have to handle it by the book. Now, the most crucial part of the slide is right there at the end. The housing allowance is excluded from your income for federal income tax. That's huge. But, and you cannot forget this but, it is not exempt from self-employment taxes. The IRS still considers it part of your earnings when they calculate what you owe for Social Security and Medicare. So, how do you figure out the exact amount you can exclude? It's not as easy as just taking the number the church gave you. You have to follow a specific rule. The amount you can exclude is always the lowest of 3 key figures. Let's look at what those are right now. And here are the 3 magic numbers. Number 1 is the amount the church officially designated, and this has to be done in advance, as your housing allowance. Number 2 is the fair rental value of your home, furnished, plus utilities. And number 3 is what you actually spent on housing expenses for the year. You calculate all 3, and whichever number is the smallest, that's your maximum tax-free allowance. So what counts as actual expenses? Well, this slide gives you a great checklist. You've got the obvious stuff, right? mortgage or rent, utilities, but it also includes things like your real estate taxes, property insurance, repairs, and even furnishings for the home. This is where meticulous record keeping really pays off. We are in the home stretch now. We've figured out who's who. We understand dual status. We've sorted out income, and we've calculated the housing allowance. So let's talk about the final piece of this puzzle, deductions, and how they play with all this tax-free income. Now, this is a rule that can really trip people up. You can't get a double tax benefit. Basically, if a chunk of your income is tax-free because of the housing allowance, you have to reduce your deductible work-related expenses by the same proportion. So for example, if 30% of your total income was that tax-free housing allowance, you have to reduce your total deductible ministry expenses by that same 30%. And that brings us to the end. After walking through all of these complexities, from dual status to the housing calculation, the final question is a really powerful one for every church leader out there. Is your church ready? Are your systems in place? Is everything documented correctly? Hopefully, this explainer has given you a solid map, but for your specific journey, remember that consulting a qualified tax professional is always the wisest final step.